know it seems like a while ago, but remember when I talked about how bookkeepers need to be ethical and responsible? Well, this is one of those times. An inventory error might not be your fault. Heck, you might even be the bookkeeping boss that found it and saved the day by correcting it. Either way, when errors are fixed and new reports are created, it's important that you make sure to add a disclosure to those new financial reports, stating what was done and why. This way, anyone that looks at it will know what is going on and why there are new reports. Here, listen to an expert with some advice for you about disclosures.
When we find issues or errors, especially when it comes to specifically inventory, we want to make sure that we disclose that issue or error in a way that helps somebody who's looking at those reports to understand why there could have been a change for that same period. So you ran the financials for January, you gave those to the business owner, then you have an error that is discovered that affects that, and you redo those financials and give that to the owner. You want to help them understand what the differences are, why that change was made. Now, when we use the word disclosure, typically accounting professionals will think of disclosures as something very formal that you might give with a financial statement for a bank or an investor. This is a piece of information that could be used potentially in a disclosure, but those types of financials are going to be released by an accountant, and they go through a much more rigorous process and would want to have more explanations and so on and so forth. But what we want to do always as a bookkeeper is document changes, errors, issues that are going on in the books, especially if they are material, meaning that they're fairly large or could affect an amount or a number that somebody is looking on that report when they had previously looked at it and didn't see that change or that error or issue. So again, we want to have good notes all the time. Anytime we find things when we're working with a client that are going to be significant or important to highlight, we want to make sure that we disclose those. We tell, obviously, our owner, the business owner who is looking at those reports, but also potentially if we're working with an accountant that might be doing a more formal disclosure, we want to give them that information so that they can make the appropriate disclosures on those reports officially.